All right, guys, bang, bang. Got a very special treat. Will is here as always to cover on-chain metrics, but we also have Checkmate who works at Glassnode. And so we got a whole bunch of great stuff for you. Will, maybe let's start with you real quick. Give us a summary of what you've seen in the on-chain metrics for this past week.
Yeah, so hey, Pomp and Checkmate. I'm super excited to do this. From my newsletter, just kind of from a very high level overview, some of the things I saw this week were, first of all, obviously, we're still trading in this, 32 to 40K range. A little over, 15% of Bitcoin's money supply is now moved in this range. So we're kind of building up this pretty large base of capital here. Hash rate has continued to trend down. At one point it dipped down to the lowest point it's been since late 2019. So of course, block intervals are a little larger than the traditional 10-minute time frame. At one point, they got over 23 minutes, which of course it means that issuance is slowed. But on the bright side, the difficulty adjustment should be coming in the next few days. I think on Sunday, people are projecting it to be. And miners are slightly selling, but in the Glassnode data, it doesn't appear that it's anything substantial, right? There's been a big narrative that miners have been dumping, and that's what's been really driving the price. But in the data that at least I'm looking at, it doesn't appear that way. Younger coins continue to sell generally, but this week we had the largest day of net realized losses in Bitcoin's history in dollar terms, which I think is important because we've had other very large capitulation events, but obviously in the larger Bitcoin grows, in dollar terms, these events are going to be larger. So still no major uptick in whales. This is something we've kind of been tracking, watching for new whales coming on the network. But at the same time, retail has been adding aggressively, over the last 2-3 weeks, especially. It seems like the smaller cohorts, the shrimp, as Glassnode likes to label them, under 1 BTC, they continue to add aggressively to their holdings. And just in general, the kind of reaccumulation continues, and exchange flows are kind of sideways to bullish. So, nothing crazy in terms of those things, just kind of continuation of what we've been following over the last 2 weeks.
Awesome. And Checkmate, maybe you can introduce yourself a little bit and talk about kind of what you do on a day-to-day basis before we get into any more of the on-chain metrics.
Absolutely. So thanks for having me on here. My pseudonym is Checkmate, and I've started working with Glassnode as an on-chain analyst. And really what my role has been there and what continues to be is really the education side. So everything from writing our weekly newsletter, The Week on Chain. We're also pushing out various other content lines, just really trying to explain and get more people to understand what the value of on-chain is. So it's one of these, it's a brand new discipline. It's really only existed since 2018, but ultimately that was the original metrics. And it's taken time for people to really digest the information that we can pull from on-chain. And it's really about getting more people to understand how valuable the data really is. And, like anything, it's a tool and it can be used rightly and wrongly, but it's really about trying to build the education base. So, on-chain is one of these tools that retail has access to at the same time as hedge funds, right? It's very much in the open source ethos, this whole market where, everybody has equal access, and people who are willing to study and take the time to learn about it can get outsized advantage.
Got it. And so when you wake up every morning and you look at the on-chain metrics, like what are the 2 or 3 metrics that you really look at that you say, hey, this gives me a quick overview of kind of what's going on, or the things that you find kind of the highest signal?
So there's probably 3 key areas that I'll look at. The first one is just based on almost the immediate term on-chain activity, right? Are we seeing a whole lot of value being settled? Are we seeing upticks in active addresses? The really simple stuff that it's quite intuitive. Are you seeing more people using the network? When more people are using it, it generally suggests that there's some value being settled and people are finding use in it. And as you would expect, during bearish markets, that really starts to taper off. During bullish markets, it picks up. So it gives you a more immediate signal. What I'll also look at is the split between spending behavior of old and young coins. So really, this is what we classify lifespan metrics. So what I really care about is, are the old people who've held their coins for 2 years, 3 years, people who bought in the last cycle, are they essentially offloading? And conversely, if they're not offloading, then I'm going to hazard a guess that they're more likely to be accumulating than selling. So looking at the overall spent age, how old the coins are that are on the move. That's a big element, and there's a lot of different layers to that. So there's nuance in the different metrics you can look at. And then the last one I'll look at is supply-based metrics. So, at Glassnode, we've got everything from long-term, short-term holders, miners, different addresses. I'll really look at the overall supply dynamics. Are we in a space where, more coins are accumulating? Are we in a space where coins are coming into exchange? So really looking at that on-chain supply and demand and how those coins are flowing around the system.
Got it. And so when you look at kind of where we've been over the last few weeks, Will and I have been covering on a week-to-week basis, kind of this sideways accumulation. Are you seeing anything specific in the on-chain metrics that you think people should understand, or anything that kind of sticks out to you as surprising or rather insightful compared to maybe what people would see on the surface?
Sure. So what we really saw over this, it's been quite interesting because there's a number of dynamics at play. We had our initial capitulation back there at start of May, which by all intents, I think it was the largest dollar value, as Will mentioned, in terms of total realized losses. It really was a fairly, it's a capitulation for the ages, right? It sits back and compares to March 2020 and the end of the 2018 bear. In pretty much all metrics. So there was an extraordinary amount of supply that sold at a loss in that first capitulation phase. We've then essentially absorbed, we've been chopping around down here in the 35 to 29K range for, almost 2 months now. And we had a second capitulation last week as it tried to sell off down to 28. And what was really interesting about that is that the market absorbed it, right? So there is an enormous floor down here at 30,000 because it absorbed that second capitulation, which I don't believe I've seen elsewhere. There's two back-to-back capitulation events, both over 3 billion in total net volume. And simultaneously, we've got this giant, the great migration of hash power coming out of China. And as Will mentioned, there are going to be miners who have to liquidate parts of their treasury. And, they're just dealing with immense logistical costs at the moment. So there is going to be a layer of that. But simultaneously, when you compare, there's two elements. Is that supply being absorbed? And we held the 29 floor multiple times so far. So, to be honest, I'm surprised we haven't gone lower. And that's a sign of strength as far as I'm concerned. And, meanwhile, once this difficulty adjusts down tomorrow, we're going to see all of the miners who are still on the network become immensely more profitable. They're mining at the same hash per dollar. So their expenses are more or less the same as what they were prior. But most of their competition, 50% of their competition is now turned off their machine. So those coins are going to get shared almost 2 times to all of the miners that remain on the network. So for every miner that's selling their treasury, there's going to be another miner who's essentially selling an extraordinary amount less coins because their expenses are the same, but their inflows are much higher. So we're going to have some really interesting supply dynamics in play. But, the market's absorbed a lot so far, which is quite impressive.
So Check, do you kind of look at this as, a lot of supply got puked out, when you look at, liquid supply change and you just see this huge drawdown, right? A lot of supply became liquid and during that big capitulation event. And now it's just kind of this process of we're kind of chopping sideways bearish as those coins are kind of reaccumulated and absorbed by, strong hands. So I think one way to kind of analogize this is like a bunch of liquid, like no pun intended, got spilled out on the counter, right? And so slowly you're kind of like adding more paper towels to absorb the spill. And it's a matter of like, as long as we don't have any more liquid coins, spilling out onto the counter, as long as that doesn't happen, over time, the paper towels are going to absorb the spill. But it's just a matter of, how long is it going to take, I guess? And, can that kind of outpace the reabsorption? Can that outpace the rate that, if we have any kind of second kind of liquid supply change where coins get puked out and you see a bunch more liquid supply come on?
Exactly. And, what I'm really seeing at the moment is pretty much there's two sides. So the old hands, people have held their coins for a long period of time. We have this very interesting dynamic at the moment. So at Glassnode, we've got a long-term holder, short-term holder. And for ease of access, there is a curve over which they actually mature. But we look at about 5 months. Roughly 155 days is kind of the median time, plus or minus a few days either side to smooth out the data. But really what we look at there is if you look back 5 months, we were roughly at the same price. And prior to that 5 months, we were rallying up into, 42,000. So we have this very interesting dichotomy where pretty much all long-term holders are profitable and pretty much all short-term holders, aside from the people who bought the 29,000 dip, are essentially at a loss. So when we're seeing losses get realized on chain, it's disproportionately the day-to-day traffic because they're people who essentially bought their coins in recent history. They may not have dealt with that kind of volatility. So there's a number of things that I'm watching. One is the coins that were purchased in January, February, because that was obviously a fairly heated time in the market. And very, very shortly, we're going to be moving. So that 5-month barrier is going to be underwater, right? So we're going to start seeing coins that were bought just after Tesla invested. That whole hype phase, we're going to see them start moving underwater. And the question is, are they going to become liquid supply, right? Are they going to start distributing back into the market? What we've seen so far is that hasn't happened. As I mentioned, almost all of our lifespan metrics have just, quite honestly, they've collapsed. So we've seen very, very little spending going on by the old hands. Now, the question is, do we get a relief rally and they basically take that exit liquidity? That would be something that I'd be paying attention to. So lifespan metrics, particularly on any kind of strong relief rally, is something I'm going to be watching. But one thing that does give me a bit of confidence is we saw that, that capitulation the other day that sold off down to 29, and we saw almost no long-term holders spending at that point in time. It was very, very, there was a couple in there, obviously, but really is a disproportionate number of short-term holders. And then we bounced. So what that told me is that the market absorbed that supply. And if the long-term holders are, if they're not accumulating at this point in time, then I'll be watching for that relief rally and see what the behavior is at that point.
Yeah, I looked at short-term holder SOPR, and it just dropped like a rock. It was pretty wild. But then to see, it bounce, in the next day or two was pretty incredible. I'd never seen it really bounce off of such a large, kind of sudden drop.
Hey guys, what's going on? Before we continue with this awesome episode, I want to quickly talk about our sponsor, Kraken. For the last 10 years, Kraken has built one of the best platforms to buy and sell cryptocurrencies online. They've got a brand new mobile app, the Kraken app. Today, you can go on and buy Bitcoin or up to 60 of the most popular cryptocurrencies in the world. And you can do that on the go 24/7. All you have to do is simply download the app, connect your bank account, and you can get started investing with as little as $10. It only takes a minute to get started. With the new Kraken app, you'll have your portfolio in your pocket. You can track your portfolio, see who the winners and losers are every day, track your favorite project, or just simply look at the trading volume for your favorite assets. It has all the features you need without any of the complexity. It's simply the best place to buy and sell cryptocurrencies. So go to kraken.com/bangbang to learn more, or go to your favorite app store and simply search the word Kraken and you can download the mobile app there. Kraken's been a longtime supporter of this show, so to say thanks, it would mean the world to me if you would go and download their new mobile app. All right, let's get back into this episode. I hope you're enjoying this one.
I want to ask you, so you kind of touched on this. How would you distinguish this between kind of a mid-cycle reaccumulation? Granted, we only have 2 sample sizes, but maybe something like, mid-2017, mid-2013-ish, or heading into a bear market where, like, one of the things you kind of touched on was the whole short-term holder, long-term holder dynamic, where, you kind of have this divergence right now that the long-term holders are adding, like you touched on, and short-term holders are selling. This has happened 4 times in terms of what I've seen. Maybe correct me here, but 2 times during the middle of a cycle in mid 2013 between the 2 double pumps, kind of in late 2016, and then obviously heading into the 2 bear markets following 2013 bull run and also following the 2017. So like, what would you be looking at to kind of distinguish between maybe this kind of mid-cycle consolidation, reaccumulation, which is kind of where I kind of stand in that pool. But just for listeners, what kind of things would you be looking at to say, okay, yeah, this is resembling bear market. We're probably heading into kind of this multi-year bear.
So I'm actually potentially a bit left of field here. I've more or less in my models dropped the concept of the cycle. I almost don't consider the cycle anymore because when you actually start looking at the supply dynamics on chain, ultimately what you're seeing is the truth, right? It's the objective truth. Sure, there's a lot of volume and stuff going on exchanges and off chain, but if you then factor in just what we're seeing on chain, ultimately a cycle is going to be driven by a supply squeeze and demand, or lack thereof. And what I'm seeing at the moment is 2 things. So we essentially put in a top, very similar. If you look at the long-term holder supply, they started distributing. So we get to this point that I call peak hodl, which is basically the zone where long-term holders own the maximum amount of supply. And in prior cycles, that's pretty much aligned with when price comes up to the previous all-time high. So back when we were at 20,000, we broke through that. If you look at any long-term holder supply chart, they essentially started distributing from that point onwards. Now, there's two things that stand out. The higher the price goes and the larger, at $1 trillion market cap, you just need more dollars to come in and absorb that supply. And we moved very, very quickly from 20,000 to 60,000, really. And you just need an enormous amount of volume to come in. So where does that volume come in? Well, you need, at that kind of scale, you need ETFs, you need sustained buying pressure from institutions. We saw the grayscale premium basically drop off a cliff and move into the discount. So there was a lot of warning signs telling us that institutions had not followed through on the swing. And really where we are at the moment is kind of in this middle ground where we're waiting for that volume to step in. Now, maybe they are the ones accumulating. That's why we're seeing a fairly strong floor at 30,000. Maybe there's a lot of buyers down below. But really we need to see that supply kick in. So we've very much seen a distribution by long-term holders, which is now actually reversing. So, arguably the same as previous cycles. But what you really want to see is if you actually look at the amount of supply held by these basically let's call them hodlers, the supply held by them in 2017, if I'm not mistaken, was around 60% or 58% of the total supply. They currently hold something on the order of about 75 or 76%. So the total floor, and there's more coins circulating since the 2017 top. So by and large, long-term holders still hold a lot more. So the way I'm looking at this is at some point in the future, there's going to be a supply squeeze because the trend is pointing in that direction. Now, when that comes, that's up for the technical analysis and the very short-term swing trades, right? Are we in the consolidation? Do we dip lower? But right now, what I'm seeing is hallmarks of what you would otherwise call a bear market, which is long-term holders accumulating and not spending. But ultimately, they're doing that from a much higher base. They're not doing it from 58 and then accumulating up to 70%. They're accumulating from 70%. And if we get the same supply squeeze, which occurs at like 80%, it's not going to take that long for that supply squeeze to kick in. So I'm very much looking for, are they spending and are they liquidating? And at the moment, the trend is looking like they are currently accumulating and holding onto their coins. So that's really the signal that I'm looking at.
That's really fascinating. I had never thought about it in terms of kind of like percentage. So yeah, I think that's really insightful, something that I've never mentioned before. I wanted to ask you, like, what do you think, the whole the futures market plays in all this? I think, that kind of accelerated the moves that we saw to the downside. But also I think, people like to talk about like, oh, leverage is so bad. But, if it wasn't for the leverage, there wouldn't have been those big spreads for, funds overseas to kind of capture in that, kind of market neutral sense where they were longing spot, shorting the futures. And I think a lot of capital came in on the way up, through the grayscale arb, but also through that, kind of cash and carry trade arbitrage as well. But, now that a lot of that leverage has gotten wiped out, do you think the market is now a lot more driven by spot? And, how does that kind of change market dynamics?
I do. I think we have returned to that spot-driven trade. I think we had about 60% of the total leverage that we were tracking get wiped out, basically through all of May. There was two kind of legs down on the sell-off. We saw almost all of that leverage get wiped out. And what was left, that remaining 40% in my gut feel, because that was fairly constant. It was like a stable floor, and we more or less haven't moved from that point. That tells me that's likely to be that risk-neutral cash and carry trade. A good chunk of that 40%, which didn't care about a 60% drawdown or a 50% drawdown, depending on what asset you're looking at. More or less what I'm seeing there is that's the cash and carry trade. So they're risk neutral. They don't particularly care what's going on. One thing I will say about, so we do get these cascading liquidations, but I think Arthur Hayes put out an excellent piece recently on the BitMEX blog where he was talking about how the crypto markets clear their leverage. And it is just so much more efficient than what we have in traditional markets, right? You can have systemic risk where these things flow out. And I think this is something that's, a lot of critics of Bitcoin and this whole market. Yes, we have 100x leverage floating around out there, but it settles within an hour, right? That gets completely cleared and flushed and it's all collateralized. And the liquidation engines are just so good at clearing all of the margin that all of that gets redistributed and the market then carries on. So once the event has occurred, it then moves into a much more stable range. And yes, I do think that we've moved into a spot-driven phase because we're just not seeing an increase in leverage. We're still seeing relatively neutral, slightly negative funding rates, but by and large, it's pretty flat. So, derivatives are not, you need a good flush out of all the speculators. They've all lost their money. And now we need to wait for that next round of people to come in and find interest again.
Got it. And so, Checkmate, when you start to think about kind of where we're going from here, are there specific milestones or kind of specific metrics or anything that you're looking for that you're like, hey, if we see X happen, that's really going to tell me something that in either direction, really, as we've been going sideways here?
So from this consolidation range, I mean, I've kind of mentioned that we've held that floor despite multiple capitulations. So that is telling me that there is someone down there, people are accumulating at that range. We are just seeing the supply. I mean, otherwise, after a 50% drawdown and pretty much every piece of FUD you could possibly come up with in the market, right? We saw Nick Carter's FUD dice get rolled twice on every side. It's going to take something else fairly dramatic, in my view, to really take out that floor. So to me, it's impressive that we've seen that floor hold. I'm definitely looking for if those long-term holders start to find exit liquidity, right? If we do get a relief rally and they start distributing into that, probably not a great sign. I suspect we'll see some of it. I don't think that we're going to, at some point just rally out of this consolidation range. I think time and patience is a big part of this. But really what I'm looking for is I look for trends. And, if we see long-term holder supply really start distributing, if we see a whole bunch of lifespan metrics start picking up, if we see exchange balances really resume this uptrend and we're just seeing people losing interest and getting out, you can even look at other signs. Are we seeing just a general downtrend in, the super speculative Doge coins and projects that really are driven on hype and little else? Are we seeing them essentially bleeding out value and people losing interest, which, realistically has bear market dynamics. And, you need to have this speculative capital flush out before we can start moving higher. So this is just a typical trend that we see play out in these markets.
Yeah. And then talk a little bit just about in terms of the trading versus maybe just using this as like education or insights, but not necessarily trading on it. Before we wrap up, I just want to kind of have you kind of frame the way you think about on-chain metrics and kind of where that fits into the overall market and kind of how you use that in your pursuit of just better understanding Bitcoin and what's happening. Is it something that you're trading with, or is it something else?
Yeah, so I think this is the interesting dynamic with on-chain analysis. So because it is so new, there's a number of layers to this. First of all, there's a lot of people still learning how this stuff works, right? So and to be honest, this is the first, let's call it a market cycle. This is the first period of time where we have full suites of on-chain tools. We've got numerous analysts. Glassnode's got a full suite of products now. And there's various analysts who are all looking at this from different perspectives. And what we're really doing is essentially learning as we go, right? So what I've definitely found with on-chain is you want to start big picture. And what a lot of people tend to do is they'll look at individual metrics and they'll say that's bullish, that's bearish. Whereas the way that I look at it is on-chain is psychology on-chain. The same way that a price chart is just human emotion, fear and greed plotted against time. The way I look at on-chain is that same effect. It's the plotting of fundamentals. It's technical analysis of fundamentals. So, even on this call, and when I'm writing the newsletter, people who are reading Glassnode's newsletter on the regular, you'll see that I break it down into sections. I'll focus on miners, right? I'll take a particular topic of interest. Am I looking at profit and loss realized on chain? Am I looking at miners making and selling? Are they accumulating? How is their overall performance going? I'll break it down into what is the psychology of different participants. So when you actually look at it from the human perspective and you kind of think a little bit before you start looking at the chart, you think about who are you actually looking at and why do you care? In particular, if you're looking at long-term holders, in the current instance, miners are obviously a big picture. That's the way I tend to look at things. So whilst on-chain, sure, there's some metrics that you can look at the next red and green candle. There's some that are much more high resolution and you can use in more trading perspective. What on-chain, at least from my perspective, it really benefits those with the it's a macro framework. There's certainly tools you can dive down into the weeds and use for more day trading type behavior. But really, on-chain is absolutely designed and works immensely well for the long-term investor, for the people who are looking for that long-term trend. And once you start diving in, I mean, you may have seen that I kind of break down, what individual cohorts are doing, and that gives me insight, right? What am I looking for? I'm looking for the old hands getting their illiquid coins and distributing them on a relief rally. That would be bearish. So it's not so much about the immediate. It's really about what's the trend and what would it take for that trend to reverse and change your thesis on, are we getting a supply squeeze or are we not? That's really the way that I look at things.
Absolutely. Makes a ton of sense. And it's a very fascinating way to kind of look at this. Will, any last thoughts from you before we wrap up in terms of what we're seeing in the on-chain metrics, Checkmate, or anything else?
Yeah, so I just wanted to say, first of all, what Check was kind of saying, I think, on-chain is so early. You've had early guys like obviously like Willie, David Quell, Checkmate, these kind of people who kind of pioneered the space, but now you're starting to see, new people, younger people, not just myself, but, like my buddy Dylan, he's 20 and he's digging into the on-chain metrics a lot, right? So I think this is just getting started. We're just at the tip of the iceberg in terms of what's going to come out of this space. And I think, as Bitcoin becomes, a larger role in the broader financial system, then the importance of it is just going to grow more so. And, Check, I don't know how you feel about this, but I think, as Bitcoin kind of becomes a larger share, takes a larger share of kind of the monetary premium of the world, on-chain will not only, be used for kind of deriving maybe trading signals, but also kind of making assumptions and analyzations about the economy itself, right? Like, because at that point, when we get to kind of hyper Bitcoinization or whatever you want to call it, you're not only just going to be looking at this kind of niche market like we are now, but you're actually going to be analyzing the behaviors of people across the economy. But other than that, I just wanted to say thank you to Checkmate for anybody listening. Checkmate's been one of the people that has been like very instrumental in kind of my understanding of a lot of this on-chain stuff. He was somebody I was messaging like very early on, asking a bunch of questions. I can't even. I feel bad for how many questions I've asked this guy, but he's very very useful. And if you reach out, he's happy to help. A real genuine guy. I wanted to give him a chance to kind of plug in some of the stuff he's working on. Checkmate does a lot of stuff with Glassnode. Obviously, he does the newsletter every week. And then also he has this website, Check on Chain. So I'll stop talking and let you kind of plug yourself in there.
Yeah, so I mean, at Glassnode, we've got a lot of really good initiatives coming out. So obviously, we've got our newsletter, which is kind of our flagship Bitcoin product primarily. We're starting to roll out two sides of video content. So the first one is basically after each week on chain newsletter. The following day, we'll have basically a video read through, and the purpose of that is people to basically see me live on our week on chain dashboard, which everyone can get access to. And essentially see how I plug together multiple metrics, and you kind of get the story behind the text, right? So the newsletter, we keep it fairly brief and concise, but you get a little bit more of my thoughts and how I put these things together. And really the intention there is for more people to understand how these metrics get put together, and really looked at as a cohesive toolkit rather than individual metrics, right? There is a story to be told there, and that's really what those are there to do. We've also got video content coming out for our Glassnode Academy. So that's really trying to bolster the actual, there's descriptions for people who are just interested in a high level view. So you get a few paragraphs, just understand how the metrics work, a video explainer, 3-5 minutes. And then there's sections below that for the real deep dive analysts who want to understand, what does this look like in a bull market, in a bear market? What does a reversal look like? If you're looking for these real deep interpretation, that's really what we're rolling out there. So there's a number of educational products. That's really been what I'm trying to push forward. There's a number of exciting ventures we've got coming out as well. Things like a Glassnode forum where we're going to have basically a zone where people can actually connect, and basically the inside club where people can connect with various analysts, share ideas, share analysis, ask questions. Get a bit more one-on-one access to myself and all the other on-chain analysts at Glassnode. So there's a lot in the pipeline. It's an exciting time. I mean, I think we're on the cutting edge of really pushing this space forward in both on-chain and just really getting the pulse of what Bitcoin is doing. And to be honest, with the amount that's gone on since 2020, just in the macro landscape and the Bitcoin landscape, what a great time to be studying the chain in depth and, really understanding the pulse of this animal.
Awesome. Well, listen, to both of you, thank you guys so much for taking the time to come on here. I think that people are really enjoying this. They're learning a ton, and hopefully we'll continue to do it. And Checkmate, thanks so much. We'll go ahead. We'll link to your stuff in the description, and hopefully we can send some folks over to you. And Will, I will see you again next week, my friend.
Thanks so much, Pomp, and thanks again, Check. This is super fun. I've been following your work for a long time, so great to finally have kind of a voice-to-voice conversation.
Thanks, Chance. It's a pleasure.